around too much. What I wanted to do today, particularly for people like yourself, John, and Sasha, that are both learning extensively off myself, is just run through what's happening with Bitcoin, talking about how there is still a bit of danger around the current price action, but really looking at Bitcoin from just a Bitcoin solely point of view. I think these days everyone wants to compare Bitcoin to the stock markets. We want to dissect the yen. We want to look at the DXY. We look to stock markets. Obviously, precious metals, as Sasha and I discussed this morning, has been a pretty contentious issue. Um, but, in saying that, I do want to just look at Bitcoin and Bitcoin alone, the market structures, the actual technical analysis we can apply. We can look at oscillators on a higher time frame. We can actually recount this entire move down, working backwards. So actually looking at what kind of spurred it from the start. As I said, we can look at interesting fib levels, and then obviously for those Crypto Academy members that are with me, we can look at, you know, why we're entering a dollar cost averaging strategy that then aligns with the deep discount in value on Bitcoin that I personally see right now as more of a mid-cycle play, as opposed to, thinking that we're going to go to 40, 30, 26k, that usual cyclical bear market pullback, which is, as we know, I think the last one off the top of my head, if I know Bitcoin enough, was 77%. Yeah. So, if you were to say we're entering a bear market now, 77%, that's to the mid 20Ks. So, in any case, let's recount firstly kind of what has occurred and why we have started to see this downside move. If you've been with me long enough, we've definitely been discussing, well, I've been showing you how from when we put in this top and then put in this lower low below this level of pretty strong support, that once we made this next lower high, that we've been in a series of lower lows and lower highs. Now, obviously, what are lower lows and lower highs? Well, that is bearish market structure. And then to the opposite side, you can have bullish market structure, where you're putting higher lows and higher highs in, right? Where the market continues up and it makes higher lows, higher highs. And that's what you call a series of bullish market structure. Now, Bitcoin consistently chops and changes, and throughout the year and throughout the weeks and throughout the trading days, you'll get a lot of changes in market structure, depending on how we're ranging and how we're chopping. And, really this entire move to the downside has just been in simplicity, bearish market structure. I think I've got something here to show that bearish medium time frame, bearish market structure. Look, that was when we're at 80k, but you can see, right, we came down, we make a lower low, we then make a lower high, we then make a lower low, then make a lower high, then make a lower low. You can define this as a lower high because in order to eradicate bearish market structure, you must close over the previous lower high. And we failed to do that, topping out at 98k, which from here to here was the entire point of control. And as a result, we've kind of nosedived right into that mid 70k region and made our next lower low. Now, the reason why this is such an integral level from a market structure standpoint is not just that on a medium time frame we're enduring bearish market structure, but if we actually go to a higher time frame, right, we go to a monthly time frame. And, I've been showing a lot of my clients that have been watching this for weeks on end that we must be maintaining above that 74k level to maintain our bullish market structure, which, as I mentioned before to you guys, is higher high, higher low, higher high, higher low, higher high, higher low, higher high. And as you can see by the skin of our teeth, if you zoom in close enough, is we dived all the way to then eradicate our bull market and into the bear market, and we saved ourselves by $100 for the time being. But I do want to say that for the time being, it still hasn't broken our monthly bullish market structure. However, if we are to close monthly and weekly candles below this level, you can probably expect that we get that continuation, much like the medium time frame, down into the 60s, potentially even the 50s. I'm not going to mention the 40s just yet to scare anyone. But yeah, that's just the reality of price action. And I think it's worthwhile revisiting why this move has been sustained to the downside, and really, it can go back, and if you want to explain it fundamentally, you can actually do it through the charts, and you can actually do it through revisiting what's actually happened with price, what's happened with the technical analysis, and that kind of helps explain then the fundamental analysis that's involved with the market and the selling. So, I've got, I showed this kind of Should have that auto fit. But if we go to, our cyclical chart here and we go to the weekly, you'll actually see that Bitcoin, perfectly. I'll show this on a log scale because it's a bit easier. But almost every single cycle we've had between the major low to the major high, we've had 1,064 days. Between the major high to the major low, about 371. If you follow each cycle, right, you see the major low, major high, perfect. Major high, major low, perfect. We then repeated this cyclically every single time. And, I did post this out to members at the time that, if we are to abide by the 4-year cycle rules of Bitcoin, which I don't believe we are, that, it's a lot of coincidence, I know, is that we perfectly made our top on the weekly chart 1,064 days from our macro lows. And then if you were to follow the exact same thing, I guess, and you are to believe that we're going to make our macro low or bear market low this year, and we're entering a bear market right now, and we're to get that continuation, then that is to come exactly on the 12th of October, which would be 371 days from the macro top last October. And so the reason why I want to explain this was to explain kind of the sustained medium time frame market structure, and why once we did top on kind of the 21st or whatever it was of October. What date is that? That is let's just say, it was the 10th of the 10th pretty much. Is that, you can explain it fundamentally. So once we got this, right, so you get 4-year cycles, OGs, whales, intensely kind of selling into this idea that this is how the market moves structurally and cyclically. Then what does this fuel? It then fuels ETF traders and retail to then take profits themselves, intensely begin selling, and it just really, it fuels the selling to the downside where, you're even seeing ETFs now. I think the average of a BlackRock holder is now underwater. And, I think their average buy of the average IBIT holder is something like 81K or something. And, price is what, 78.5. So the average ETF holder for IBIT, which is obviously the largest ETF holding, is now underwater. And there's heaps of ways through the charts to then kind of explain the sustained selling to the downside, which, as I said, you can then explain fundamentally. It's a bit of a show you the charts. Show me the chart, I'll tell you the news, right? And even when we go back to the weekly chart I'll get out of logarithmic, and apologies, as I told Sasha this morning, my trading view, when I like to switch back to my USD perp chart, likes to completely freeze me out for however long, every single time. I'm not sure why. I think it's because I have so many drawings under it that it takes ages to load. Alrighty, there we go. So you can actually see the weekly the weekly divergences that occurred between RSI and price that really mirrored 2021 top as well. So okay, I can't find it, but anyways, if I get RSI up here, and you'll see, actually I can even show MACD, is that we got a really replicated price action from last cycle, right? So price comes in, it makes an all-time high, and then gets a huge discount of 40%, and then it re-rallies to make a new all-time high. As it does this, RSI actually makes a lower high from the previous all-time high RSI, here. And what this is if price is making a higher high whilst RSI is making a lower high, we get a bearish divergence between price and RSI. And then if we go to the current price action of this cycle, what do you get? You get a new all-time high, a 30 to 40% drop. Price then rallies to make new all-time highs, but at the same time as it does, the momentum of this oscillator, which is RSI, is fading, and you're getting a lower high created. And what was the result? Well, you can see the result, where we've almost kind of mirrored this price action here. And it's almost like an exact fractal, right? Like you could almost just, it is obviously time difference, but if I get bar pattern here, right, and I compare this to this, and you kind of stretch it out a little bit, does it look all that different? Like, not really, right? It's the exact same price action with the exact same lower highs created. So yeah, once again, this was something I noted at the time. You can even see the lower highs and the divergences created in MACD as well. I'm almost certain that if you go to the monthly chart of Bitcoin and you view the oscillators in this way as well, I'm personally someone that doesn't use oscillators a lot. I do think they're lagging, whilst they're a good measurement of historical fractals like I'm showing you now. I don't usually use them in my live trading or my live investing. However, I've got all this crap on the screen. Let's go to index. The thing that's going to hurt is then going back to the perp chart. But similar things you can kind of see here. So one on MACD that I can denote here is the last time we had a bearish cross on Bitcoin, on the monthly chart of last cycle in confluence with those divergences on RSI and on MACD on the weekly is, pretty much picked, when the bear market was proceeding, right? And so right here, we've got a bearish cross on MACD on the monthly, which comes in line, kind of here, similar time to after we've topped, if we have topped, and then you can see the sustained move to the downside. As a result, do I think the sustained move is going to be to the downside because of these fractals I'm showing and because of what I'm explaining? No, but they're all relevant in the scheme of confluence and why, when I come to my conclusion at the end and kind of explain it, it should make sense to you as to why I think, we're now at an appropriate discount on Bitcoin, and I have started a dollar cost averaging strategy. But yes, I do want to check. Is this all still working? I assume it is. Yeah. Anyways, we'll go to the 74k major low, and we'll actually look logically more at price action now that we've studied why this move did sustain to the downside, medium time frame bearish market structure that we're yet to break out of. And really what happened was we made this move to the 74k major low. Now, the important part here is that I mentioned it was minorly front run, which not only keeps our monthly bullish market structure alive, however, let's just quickly explain the logic behind this. Like, why do front runs happen? Because you actually see them on Bitcoin, a fair bit, where price will come and it will put in a major low. It'll re-rally to, a significant high. That's from 49 to 64k. We then came all the way down to the low 50s, and instead of going to 49k, we front ran it and then continued upwards. And the reason this is because when you see the depth of the order books of when you are approaching a major low or major level, you will more often than not, see that Bitcoin front runs a level, because if you go to the order books, you can see how many bids are stacked between this exact level where the low is all the way down to 70k. And if you looked at this yesterday, you'd be able to see how much demand actually existed in this level and how stacked the order books were. So if you are a large whale or a large trader, and like me, you see Bitcoin is at a significant discount and you want to start scaling in using dollar cost averaging and limit orders, would you prefer to wait until this exact level is hit and then and this is also whilst knowing that there's so many other people's orders here? Well, no, because if there's not enough sustained selling into the high time frame level of support, only a certain amount of orders are going to be hit, right? So how does a front run kind of happen? Well, at least from a spot perspective, and even a perpetual perspective, I guess, is that heaps of people laddered orders above where other people had orders, and that's why the front run occurred. Not only that, there would have been a lot of people short from this 98k high, from this high, from every prior lower high, including from us, that are now closing their shorts, taking profits, potentially flipping long, or maybe just using risk management to take profits. And of course, closing out a short is the same as a result of a market buy, and you are then seeing that bounce from the people stepping in on spot, from people closing their shorts, from people getting long. So for now, we have front run the major low. To me, this really says one of two things. I'm hoping we get continuation from this level. However, it is usually more probable than not than when you do get a front run of a level, given that it can be a dead cat bounce due to shorts closing, due to early buys getting thing that price may make a new high, up here in the mid 80s or whatever it is. But more often than not, we come down, we actually do hunt that low with a reclaim, and then we see higher. I did just think I'd noticed that. But the reason why this level is such a good, strong level of confluence as well is it's not just a major low. We do have, did front run this SR flip last time we made the major low, but you can see that this is a very integral level even when we're studying 2024 price action, right? It represents our 73k, or just above our 73, 74k major all-time high that we then chopped down from for the whole year before we rallied above it when Trump got elected. But it also represents the pivot golden pocket that is an integral reversal level for Bitcoin usually, more often than not. Those that have studied Fibonacci's do know how much I love them and how much Bitcoin loves them and how much every asset loves them. But you can actually see the confluence here now, right? And we've actually come down into a major golden pocket. We're currently trading within it, and I would like to see that hold. And that's a key bit of confluence for me for this area being a strong area that it is. And we did a pretty similar thing when we made this major low as well. So good to see that we've sliced through that now that we're coming in there. Now the idea, and I will briefly go over local price action, is what really happened on this last lower high, and what actually is. I will just show a quick more few things as to, because I was looking at this with Sasha this morning, is that if you were to study swing failure patterns and even POCs, you can go through and see that almost every integral level that we made, after we made the lower low, we made a new high. We then kind of sold off, re-rallied, swing value pattern to the high, and then headed lower. And as John knows, and as many of my advanced traders know, that you can pretty much trade Bitcoin only knowing what a swing value pattern is, and you pretty much would outtrade 99% of this market. So let me show you just how easy this is to spot. Price comes and makes an all-time high, then trades lower, and then comes back up to that major high. Swing value patterns it, back tests it, rejects it. Price dives. We then re-rally. We put in a high. Price dives again, re-rally. Swing value pattern, back test, rejection. Price comes down, makes a new low, then makes a new daily candle high, sells off, re-rally, swing value pattern. Price comes down, it makes 2 to 3 different daily candle highs here, and then trades in a range for a while as everyone was on holidays. It comes in, it then swing value patterns back tests that major high, and then continued down. And this is literally just how you can spot the continuation of lower highs, and exactly that if someone was shorting the market throughout this entire move, how they would be able to compound their shorts on almost every lower high, perfectly just shading swing value patterns. Obviously on this last high that we rejected from, you had the confluence of the point of control, which obviously was pretty much our most integral level of technical analysis to kind of reclaim in hopes that we would eradicate this second last lower high, which it is now, and break into new bullish market structure to new all-time highs, is that we rejected, a years long, even more, what's that? It's 13 months, 14 months of volume in that. This 98K level is the most in which all the volume has been traded at. Pretty important level to reclaim for numerous purposes. We came in, we rejected that. And as a result, we've got that continuation of bearish market structure. So where to from here? As I said, I'm not averse to getting continuation now that we've structurally made our visit to this high time frame support. There's a number of different ideas I have from Eliot wave counts and harmonics that I'll briefly show you. But we have hit a very, very integral level for monthly market structure, and it's exactly why I decided to start scaling in with limit orders into a dollar cost averaging on Bitcoin, because at the end of the day, as investors and as traders, you guys need to understand that that no one knows what price is going to do, right? Like you actually have zero idea. So if I see Bitcoin at a deeply discounted value, I'm not trying to time the bottom. I'm not trying to time the pico low that Bitcoin might hit and then become, a bit stronger. And once again, I'm speaking from an investing standpoint, not a trading standpoint, is I want to begin scaling in and limit ordering into Bitcoin towards that major low, right? And we did the exact same thing in 2022, and it's a very easy example today, is that we actually did our first dollar cost average into Bitcoin here before 3AC and the Lunar blow up, because I saw that Bitcoin had discounted and was beginning to probably get institutional involvement in this new cycle. Bitcoin was already down 60%. So to me, that was a cue to begin getting involved. Now, I dollar cost averaged in here. I then had a limit order that hit here, that hit here, that hit here. And then we dollar cost averaged in at multiple prices to get an average price of 22,500. Really no different here, right? We're using a similar strategy to the bear market, and we're identifying that, Bitcoin is at, a pretty discounted value that we're pretty happy with, and we want to begin dollar cost averaging in to the downside. So, sorry, I'm on the wrong chart. Let's get back to that perp one. It'll probably lag me for a bit. But Whilst I'm kind of paused, does anyone have any questions? Sasha, John, or anyone? Just make sure you ask me in the YouTube chat. I'm not on Discord at the moment. I will quickly, briefly check Discord. John will remortgage the house below 30. I'll just wait like 30 seconds because I know this stream lags. And if you guys have any questions, I'll go on it. Oh, I do no questions. That's fine. So it's exactly why I wanted to begin this strategy, right? And I'm actually more happy than not to see Bitcoin come lower, as Will's kind of been explaining in our premium Discord, that we're actually happy to see price come lower into these levels, knowing that it actually provides a lower average buy, and due to our high time frame conviction on Bitcoin, is that if we believe that Bitcoin's going to be $1 million one day, 250k at the end of the cycle, whatever it may be, well, at 78,000, it's pretty cheap, right? At 75,000, it's even cheaper. 69,000, 65,000, whatever it is, we consider that very cheap, and we want to take advantage of that discount just as we did in the last bear market. And we believe, given the macro situation and stuff that I'm not going to get into, given institutional involvement, ETFs, nation states, so on and so forth, is that we don't think that Bitcoin will drop as much as it has in the prior cycles unless we get a serious Great Depression or other macro factors come into play. But for now, we believe liquidity is going to expand further. I know there's a bit of contention right now over US liquidity versus global liquidity. We've obviously got Walsh that's come in as a new federal chair. But in any case, we believe that it's starting to discount pretty nicely, and we want to have limit orders to take advantage of that. Obviously, we've had our first three hit. We're bouncing from that 75k support. I think it provides about a 78,500 average buy on those first three being hit. So we're trading right around it, right? But the best part is that we don't know what price is going to do. So we're not going to try and guess. And this is why dollar cost averaging and limit ordering is so important. But in any case, to finish this off, I will just quickly, I don't know how long this has gone for, only 17 minutes, that's all right. I will quickly go over a couple of different ideas that I've been looking at that I sent into advanced traders today. One is going to be a vicious idea that I want to show, that if we are to draw, a parallel channel from our 65k ATH straight across our free drive all-time highs that we put in, and it's usually a bearish structure in itself. I'm just trying to see. Do I have that shape? Here we go. Free drive. Bearish structure is that it perfectly fits and aligns with this parallel channel that longs right along here. I'm not saying within 2 weeks we can hit 58k, but within less than, what is that date? Yeah, in 2 weeks we went from 98k to 78k. Knowing Bitcoin, knowing what happens is what may give rise to a drop like this, I don't know, but that's the whole point. We don't know what price is going to do, but I would consider a drop to 58,000 to wipe out a lot of this liquidity and come perfectly into our major cycle pivot golden pocket and align perfectly with this parallel channel. A pretty significant confluence idea, and it's exactly why my last DCA is placed at this area. And what may give rise to price entering that level or slightly lower is an Eliot wave count I've been looking at. And it'd be something like this, where we've come in 1, 2, 3, 4, and we're still looking to put in wave 5 on this huge super cycle, where from the lows on Bitcoin, right, we've made one wave where this would probably be an expanded flat, and it comes in, makes a second wave, third wave, and I originally thought we were completing wave 4 here, and it was an A, B, C correction to here. But given the development of new price action, and we didn't begin to do a 5-wave up from here, it's more so looking like this is an A, B, potentially C. And that's something that I just want to be aware of right now, as opposed to my initial thinking, which was A, B, C, 5 count down here, A, B, C, 5 count down here. It just looks more logical to me now, zooming out, that this was a 1, 2, 3, 4, 5, and now potentially we might bounce from this high time frame level here, A, B, C, and make a new low, around into the 50 or 60Ks. where that would be our macro cycle bottom. So that's a Elliott wave count that I'm currently watching. I do have some different slightly logarithmic ones. These are quite extensive in advance that only really my advanced traders understand, where we've completed wave 5 and now getting a macro ABC. I'm using my dollar cost averaging strategy to make the most of this move to the downside and hopeful that we then create a new 5 wave count higher to new all-time highs. But really my strongest and my predictive movement is this bullish Cypher harmonic, which has been playing out to a T, where I'm not going to explain the rules too much, but if you're to get Bitcoin coming up A, B, C, D, you can see here that to fit the parameters of a bullish cipher, the A to C leg is the 1.272 extension. You need to have the 786. I can't exactly get it right on the time frame I'm here, but this is the 786 here. This leg has to be between 382 and 618. You can see it's 0.578. In between here fits perfectly as well. And so what a bullish Cypher harmonic is, I think I showed this for the first time when we were around here to my Crypto Academy members with the idea that given we're rallying, we might come up to 110k, retest this golden pocket, which if we were to draw down like this, yeah, perfectly would hit that, and then we'd make our way to here. We haven't, doesn't really matter to me, the pattern's still alive. And so now my hopeful thinking is that this is valid, and whilst it's predictive in nature, is the massive bullish cipher reversal happens at this level, which kind of makes a logical sense, right? Because it's a retest of prior cycle highs. It would represent a shortened bear market. It would represent a more muted and less volatile bear market. Given institutions, given BlackRock, given Sailor, given nation states, whatever it is that you fundamentally want to explain, we come in, we tap the major 786 as opposed to bouncing from the golden pocket if we pull from this low to this high. We'd hit the major point of control where the most volume buy, you can see it like it's almost a country mile, has occurred exactly at the 67k level, which then aligns with prior all-time highs as mentioned, and we'd hit this level and then begin to see a mega reversal to new all-time highs. So once again, I've got a few patterns I'm following to the downside. I have a thorough understanding that we can still wick through this level during this month, but reclaim it and hold it for bullish monthly market structure purposes. And hopefully, even if we're hitting this level here, that I'm getting, I'm just making the most of this move to the downside where, even if this was like right here, is that we complete wave 4 here, even of this Elliott wave count in the form of the bullish Cypher harmonic, and then we get a major boost to year end where we see a new all-time high. So anyways, hopefully, I know I've run over a lot from market structures to oscillators to Elliott wave counts to harmonics to whatever, but I did just want to quickly, today in the, how long has this gone for? I can't even remember when I started, but I actually think it's gone for half an hour or so. I'll be able to check on OBS here. Yeah, we've gone for a bit over half an hour. I just sort of wanted to show you the technical analysis and the charting and the processes as to why I'm dollar cost averaging into Bitcoin, how we played this bearish move to the downside through multiple things such as medium time frame bearish market structure, the weekly divergences that exactly aligned with our 2021-2022 ones, bearish MACD monthly rolling over. You can fundamentally explain it from almost any angle, from the 10th of the 10 liquidation event to cycle sellers to losing our M2 correlation to this and that 2025, whatever you want to play it out, you can always look to the charts to thoroughly explain it clearly with no bias. And that's exactly what I wanted to do today. But hopefully it made a lot more sense as to why I see it as a discount now without even showing you on-chain indicators, without even mentioning those fundamentals, without even showing you correlation charts. Now, I will just quickly show you, these are two charts that I like to look to. Gold is bouncing heavily, and I don't know if this is the bottom, but we've perfectly got a retracement to our major 786 on Bitcoin Gold, and gold has now outperformed from the top Bitcoin by 60%. From the end of 2024, pretty much when Trump came into office. I even flick this over to log scale, and I can show you that we're coming right into the major golden pocket of the intersection of Bitcoin and gold. So it's either we sink or swim here versus precious metals. You can see how distinctive this is as an SR flip. I've obviously done from cycle low to cycle high on this Fibonacci retracement, and we're right at the major golden pocket. So even going back to relative scale, similarly to Bitcoin in the sense that I'm hoping that we're finishing wave C here and Bitcoin can begin to outperform gold or even silver and precious metals. But you can use multiple charts and multiple ways to value Bitcoin. This is one just looking at Bitcoin versus Nvidia, the darling of this cycle. One can argue we're at all-time lows of Bitcoin's value versus Nvidia's. Obviously in 2021, when Nvidia wasn't going as well, Bitcoin absolutely crushed it. But we have very large periods of outperformance versus Nvidia. I know the world's drastically changed since last time, but once again, this is just a value metric that can show how discounted Bitcoin's been. Mainly since throughout 2024, 2025 to now versus other assets on Earth. And my conviction hasn't wavered at all. Hopefully yours hasn't, but yeah, hopefully this all made sense as to why I am beginning to dollar cost average into Bitcoin, why we've got a strategy in place, why we're going to stick to it. And yeah, keen to do a few more of these live streams. Hopefully it's a bit funner than just looking at Bitcoin in entirety and just reeling off the same technical analysis I have for a while. But yeah, open to suggestions, open to doing content or live streams on absolutely anything, whether it's reviewing on-chain data. Obviously, I want to do a few more live streams where we look at Ethereum, altcoins, ETH dominance, ETH BTC, Bitcoin dominance, whatever it is. And yeah, getting a lot more content, live streams, and engagement out for you guys. So, cheers to John, Sasha, any of my advanced traders. If you want to go over any technical analysis concepts, feel free to mention me in the Advanced Trader Discord. To any Crypto Academy members that want to run over the dollar cost averaging strategy, or any of the technical analysis I've shown as to why I'm beginning to do that, feel free to reach out as well. But yeah, hopefully this all made sense, and we can, action a bigger and better plan when it comes to the altcoins, which we'll do in the next few days. And yeah, I'll be getting a email and text out also about the dollar cost averaging strategy for Bitcoin, which I'll do hopefully tonight, if not tomorrow morning. So cheers everyone for coming. For those that did watch, I appreciate it, and feel free to provide absolutely any feedback you want to